let's do Meta real quick since I have it pulled up here. Let's start off with your take on Meta. Let's go.
Okay, cool. So expectations going in here, revenues coming in at 44.8 billion, which is up 15% year over year. EPS is expected at $5.83, which is up 13% year over year. Already off to a great start, by the way. What did we say? We like to see above 10% for year over year figures when it comes to revenue and EPS, because that typically means their forward guidance will be a little more confident. Now, why this quarter matters more than most. Oh, wait, before we get to that, CapEx is expected between 64 billion to 72 billion for the full year guidance, and Reality Labs is still losing 4.9 billion this quarter, by the way. So that's just one thing to keep in mind about Meta is ad revenue and Reality Labs are kind of like their big Achilles heels, if you want to call them that. So the reason this quarter is going to matter more, AI CapEx. The spending scrutiny is getting real and it's becoming a lot more pressure. Their AI infrastructure investments like Project Hyperion and Prometheus are running tens of billions a year. Wall Street wants the upside of leading AI, but it's starting to ask these questions. Where's the payback window? Are margins getting squeezed? And is Meta forced to outspend rivals just to keep up? Now, the talent wars are also here. Brain drain or strategic bet. Zuckerberg has been offering 200 million plus comp packages to steal AI leaders from Apple and OpenAI. Great PR, but raises red flags about rising OPEX and retention risk. Mind you, he just poached, I think, two of Apple's AI engineers. So it looks like it worked. We also have Threads, WhatsApp, and monetization surfaces. Meta's still trying to show that platforms like Threads, 350 million plus monthly active users, by the way, and WhatsApp can be monetized at Facebook/Instagram levels. Investors want revenue per user's progress, evidence of ad traction on new platforms, and updates on how AI tools, think Advantage Plus and Llama, are improving ROI for advertisers. Now, the final thing here is regulations. This is a creeping cloud that Meta has always had to face. The $8 billion Facebook privacy suit is settled, but DMA compliance in the EU and US antitrust probes are still in motion with these guys. Investors will be parsing expense guidance for legal/regulatory costs that could eat into the margins in the second half of this year. Now, what to watch in Q2 from our call? AI spending efficiency. Can Meta justify its 70 billion plus capex with near-term utility and user impact? The ad revenue engine. Are Advantage Plus AI tools driving higher spend per advertiser? And is engagement still up year over year? And then Reality Labs drag, still bleeding billions. Any shift toward break even or just another money pit? And then margins, FCF, and buybacks. With 13 billion in Q1 buybacks and 70 billion in cash, investors want to see capital returns continue even as costs currently rise. Now, why does this matter to the market? Meta is now the AI capex bellwether. If Meta shows it can grow earnings while spending big on AI, others will follow suit. A miss or weak guidance could ripple across Google, Microsoft, Nvidia, and the overall AI ecosystem. Now, their biggest risks heading into this, margins are getting hit by talent costs and compute shortages. AI results, these are long-term. Investors want short-term ROI. Reality Labs is still dragging down earnings quarter over quarter, and they have legal headaches, which are hard to model costs because people won't know, well, how much of their capex are they going to have to use in legal and regulatory fees at this point? So that's one of the big concerns about them as well. So will CapEx get revised up again to 75 billion plus? Is Meta trimming OPEX to offset? And how are WhatsApp plus Threads monetizing? And finally, are supply chain issues limiting their actual AI deployment as well with Reality Labs? So is this overbuilt or are they going to be over delivering? Because those are kind of the two situations they have now put themselves in.
Great analysis. I like that. Now let's take a look over. Let's start off with stacks. What does stacks show us right now? So first off, search for Meta. Dark pools. I want to point out on the 18th we had a big flood of purchases, but then 18th, the two golden ones that you see over here, 424 million, 435 million came in on that day. On the 16th, 400 mil as well. So definitely a lot of money flowing into it. Let's go over and check out what the purchases, oh, there we go, the buys. And then especially because this is one of our biggest companies that we have, I'm just going to filter for big money real quick. Big money shows, and these are anything where they're spending over $1 million. We do have some of these shorter term ones where aiming for the first, they are aiming for over 700. And you can see it's kind of relaxed back down since that. I'll show you guys on the chart a little bit. It's kind of forming a bull flag from what I can see. Zuckerberg, he's been doing a pretty good job in making sure that, you know, this company reports well, and you know, they've got good leadership. The one put that we see here aiming for this Friday as well as saying it's going to be under 700. So that's just something to consider. In terms of the unusual prints too, not too much in this last month. We have one on the 14th and one on the 9th, and then everything else is from earlier in the year. So keep that in mind. But these ones aiming for December, you know, aiming for some pretty ridiculous strikes. Over 1,000, over 890. This one's aiming for $1,430 for Meta to be valued at. That's almost over 100% from where we're at right now. So something to consider. The chart itself, we got to always start off, pull out to the big view. We are near all-time highs. We saw a big drop down in terms of the tariffs and all of that news, and we've basically see it run back up 50-something% from that low. Right now, I would say we are in this bit of a bull flag pattern. We are at the top of that, so there's potential for us to break out. If we do see it break out, I would not be surprised to see it come back toward all-time highs before it decides if it's going to want to go up higher or just kind of chop around up in that range. The point of control over here as well is at that 400 or that 700, right around 700. So if it breaks down below 700, I would definitely say we could see 678 pretty quickly on that range. So let me mark those off for you guys real quick. Of course, if we're able to break up above that. So Meta on earnings, if we take a look at previous earnings as well, positive earnings popped up here, positive earnings popped up, positive earnings dropped, positive earnings popped up and then dropped, positive earnings drop, positive earnings pop. So you got to understand, it is one of those ones where it does not move directly correlated to what the earnings has to say. This is going to be related to that forward guidance. PE ratio out of 27, and then our revenue is pretty solid. Their net margins in that 30 to 40% range. Annually, it's only gone up over the course of the last few years too. So strong company, definitely one of the leaders in the AI space. But I will have to say, considering, you know, at least for me personally, I'm using ChatGPT, sometimes Gemini from Google. I'm not necessarily using Meta's AI that much. So, you know, comment for me. What is it that you guys do? I did use Meta's image generation for a little bit just to play around with it for fun. But in terms of, you know, am I using them to help me solve problems and to help me create content and things like that? Not necessarily as much. Definitely more so using the LLMs from, you know, ChatGPT, and probably using, you know, Google a little bit more from that. So we'll see how they end up faring in the long term. But as of right now, with what Stacks has to say, probably a little bit more bullish than bearish on this. We will come and revisit this again on Wednesday. just because Wednesday after close is when they report, and we're probably going to have to take a look as to what direction that goes.